What if I told you the world's biggest EV company might be failing? The same company that beat Tesla to become the world's #1. They might now be in serious trouble. I'm talking about BYD, China's pride, the EV giant that everyone thought would one day dominate the future. But right now, it's facing debt, slowing sales, global pushback, and a government that seems to be pulling back the support that once built its empire. So in this video, we're breaking down what exactly happened with BYD, why it matters for your money, and what it says about the future of EV industry. Just 2 years ago, BYD was unstoppable. They sold more than 3 million cars in 2023, officially overtaking Tesla. At that time, it definitely did look like a new world order for the EV industry. You are talking about Chinese efficiency, unbeatable pricing, and massive government support from China government. But by 2025, something changed. It was like a wake-up call. BYD sales fell year on year for the first time since 2020, and their net profit dropped by 30% in just one quarter. So, what went wrong? How can a company whose numbers in UK is growing at 880% year on year be losing 30% in profits? The answer could lie in their home market, which is China, that makes up 90% of all their sales. And this has got to do with China's policy and how, by shifting it, causes a big problem to BYD. But before going to that, let's talk a little bit about BYD's overseas agenda. BYD has been expanding aggressively, building new factories in Thailand, Hungary, Brazil, and pushing hard into Europe over the last few years. While it's working very well in some regions, it does hit its roadblock in certain others. For example, ever since Trump took over as the president of the United States, the US market is basically closed off to BYD. BYD faces sky-high tariffs and upcoming bans on Chinese tech in EV by 2027. So their once idea of hoping to grow in the US market, well, that's not happening. Because of that, Europe has become their next big bet. But even then, it's starting to hit a wall as well. Well, you see, EU has slapped BYD with up to 27% import tariff. They have accused them of dumping cars below cost price because Chinese government gave them a lot of subsidies. Remember all about the aluminium dumping, all those kind of things? Yes, now the same thing is applying to Chinese EVs. And this is a huge deal for BYD because their biggest advantage overseas is actually its price. So once their pricing ability disappears, so does their moat. They are no longer that affordable Tesla alternative. They are now just another expensive foreign brand. So let's rewind a little bit right now and talk about how BYD actually grew so fast over the last few years. By the way, for those of you who are wondering if an EV car really helps you to save money, well, I have the privilege of owning an EV and a petrol car. In fact, I did a full comparison of how much money can you save. So check out the video here. The answer was very simple: China. You see, almost 90% of BYD's growth and sales all came from Chinese domestic market, and this is powered by a massive government subsidies. Last decade, Beijing actually pumped more than 230 billion USD into the EV industry as incentives, such as cheap loan, tax breaks, subsidized R&D, even free land for factory, and direct financial injection into manufacturers of EV and even people who buy EV. It was at the back of all this massive subsidy that created the Chinese EV miracle. But here's the thing, the very same support that helped them to build an empire today is backfiring on them. Ever since more and more EVs enter into the Chinese market and all this talk about EV graveyards and all, today the Chinese government is starting to pull back on its incentive. Officials are beginning to crack down on aggressive discounting, cutting subsidy, and tightening regulations. And once all this support fades, the reality started kicking in. Without the support of all these subsidies, BYD's growth engine started to fade. So for the first time in 5 years, we are starting to see the cracks form in the world's largest EV manufacturer. So what's really happening there with BYD? Over the years, many people ask us how you guys come up with so many content ideas, how you know what's happening and so on. Well, there is a trick. I actually read the TCB newsletter. It's a 5-minute newsletter that summarizes all the interesting news in Malaysia and in the world. And there it is that I get some hints of what are the next topic that I can talk about. So if you want to get all the interesting news in a 5-minute read, well, check out the TCB newsletter. The best part is, it is free. The first thing that really worries most investors is BYD's debt and cash flow. You see, over the past few years, BYD went on a building spree. They built new factories everywhere, offices, assembly plant, great for growth, but it was terrible for their cash because most of that expansion was actually funded through borrowed money. It was a combination of loan, incentive, especially supplier financing. You see, at one point, sources say that BYD was taking up to 275 days to pay its supplier. In other words, they take almost 9 months to pay their vendors. And this became really worrying because it could cause a whole domino effect. So in 2025, Beijing stepped in, forcing automakers like BYD to pay within 60 days. So this one policy change exposed what was really happening. BYD's cash flow was actually stretched thin. To give you a quick picture, look at their quick ratio. Basically, it means how much cash or liquid asset that a company has to cover their short-term debt. For BYD, that number sits at 0.42. And for Tesla, on the other hand, it's sitting at 1.36. For you who do not understand what it actually means, it simply means this. Tesla have more than $1 ready in cash for every dollar that it owes, while BYD have less than half of it. They do not have enough money to pay back their debtor in the shortest term. So in the past, it was still okay. As long as you can keep selling cars fast, you have money coming in, you can turn that money around very, very quickly. But when sales slows down and credit tighten, this kind of liquidity gap could become very dangerous for a company, especially when BYD has grown so fast and so big. And this is why some analysts have started warning BYD as the next Evergrande of the EV industry. Now, remember this company called Evergrande, the Chinese property giant that borrowed too much of money, built too fast, and collapsed under its own debt. The fear is that BYD might just be heading down the exact same road. There was this report by GMT Research. They are accusing BYD of hiding its true debt through supply chain financing. In simple terms, it means that instead of showing all their short-term borrowing as debt, they are pushing this debt to their supplier, just paying them slower than usual. And that way, their books look cleaner than they really are. Why do you need to go and take up bank loan when you can just track payment from your vendors, right? And for those of you who are familiar with the Evergrande story, that was exactly what happened. But you see, here's the difference. Maybe China has learned from this Evergrande incident. Beijing today is no more waiting for another collapse. Regulators are forcing BYD and other car manufacturers to pay their supplier faster. This simple policy flush out hidden leverage before it explodes. So good job to Chinese government. It's really not a takedown of the industry, but rather trying to control the industry to make sure that there's no blow up. And let's not forget the Buffett moment. When Berkshire Hathaway, which held BYD shares for over a decade, sold its entire $9 billion stake in BYD. When that news broke out, BYD stock fell 7% in just 3 days. And here's the thing, right? Buffett has always said this: I do not sell the companies I own as long as I believe in them. Now, selling it was a signal to the market that he didn't quite believe in the stock's growth story anymore. Since BYD reached its market cap peak of $175 billion in May, today the value has dropped sharply. Sure, BYD is still a huge company, but investors' confidence is shaking. Some would say even gone. And here's the thing, many people are saying the era for the easy growth for Chinese EV is finally over. Now, before we go further talking about investment and EV industry, for those of you out there who own a BYD, should you be panicking? Because if the company go bust, what's gonna happen to your car? The answer is no need to panic. BYD is still fine. Even if there is a chance that the company go bust, your car will not just suddenly die. BYD's system, their in-house infotainment software platform, and all those over-the-air update, it actually runs independently from their core company operation. So yes, your battery, your motor, your system update will still be fine. The only risk will be the after-sales service. Now, if BYD chooses to slow down its operation, their parts and services might take a little bit longer. But not to worry, because in countries like Malaysia, Sime Darby can actually handle the warranty and servicing independently. So, local owners are always going to be safe. If there's anything a BYD car owner need to be worried about, it will simply be reselling value. But having said that, I believe that most EV owners don't really bother about reselling value, right? If not, you wouldn't get an EV. So now, the bigger question is this: what does BYD slowdown mean for the EV industry? Firstly, it's not a collapse of the EV industry. BYD is still fine, EV industry is still fine. But it could mean a correction. You see, for years, China's cheap EV has been flooding the world. But today, it could be a little bit overcrowded. Too many brands, too many factories, and may not have enough buyers. Some small EV players like WM Motor, Bordin have already gone bankrupt. And big names like XPeng or NIO are actually burning cash quite fast. So on the industry standpoint, the EV race has kind of shifted from that let us just burn cash and grow to now let's survive smart. And also globally, many governments are actually cutting subsidies for EV and tariffs are rising and the demand for EV is now normalizing. So I would say that the bubble is not bursting, it is more like it is maturing. So from here on, only companies that can generate real profit and scale without going into heavy debt will survive in the long run. In other words, EV adoption is already there. EV as a technology, it's already there. The only question is, which are the company that's gonna survive for the next 10 to 20 years? The BYD story today is actually a massive lesson in modern industry. Having great ambition in the business is good and it can drive you to be the number one in the industry. But only discipline can keep you there forever. Especially when you are backed by huge incentive from government, you need to estimate that one day government pulls the plug. How are you gonna survive? So the thing is this, every boom eventually will meet its reckoning, and when that happens, you will actually find out if the business is actually built to last. And last but not least, cash flow always wins. So what do you think? Do you think BYD is just going to be too big to fail, or it's another bubble that's waiting to burst? Tell us in the comments below.